Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you as we delve into the depths of everything market-related over the last 7 days and potentially pick up some of the pieces of our collective portfolios after the volatility we've seen. It has been substantial. We'll talk about that and a whole lot more after we do the disclaimer, which says that everything we're going to discuss tonight is very, very general. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it very carefully amongst all of those considerations, or seek the help of a financial professional to determine its appropriateness for you. The other important part of this disclaimer is that trading is risky, investing is risky. At some stage, you're inevitably going to lose money, so be prepared for that. It's also important to remember that ultimately it's you and not I who's responsible for all the stuff that you choose to do. With that in mind, we are going to talk about stocks, bonds, commodities, crypto, indices, anything we can get our hands on the charts for. You ask the questions, I'll do the analysis, or it could be anything to do with the 3 M's of trading: methodology, money management, or mindset. I have a question from Peter this evening about some methodology aspects or items. Let's leave it at that and head over to the Amy Broker screen to kick off with our portfolio management. That is not our portfolio management. That happens to be the lithium price, which, as you know, many of you know, you follow me on Twitter/X, and I post lithium charts each night. I literally just put them up. But I wanted to start over here on the Nasdaq Composite Index, which is one half, you could say 1/3 of our portfolio management model, which determines at a total capital level how much we have at risk. So yes, we've got little individual trades running around, but how many of those individual trades we're about to have at any point in time. And I think it's quite a sensible model in that if the market is very strong and in a strong bull market, we have lots of risk on the table, or more specifically, I guess, a low volatility, strong bull market, we have lots of risk on the table. As the volatility starts to come in, as the trends start to flatten out, we take some risk off the table, and then if we turn into a bear market, we would have very little risk on the table. But some people may then choose to allocate more to shorts. We haven't had to cross that bridge, I don't think, in recent memory, so we will explore more of that concept when we do. For now, let us just remember that on that candle there, I'm not sure if you can see it, so I've got a blue line, highlighted by a blue line, and my mouse is moving up and down over it. That was the candle we had to do our analysis on last week, and I said, I just checked the tapes, that it wasn't enough in and of itself to change our risk level, because it was literally one black candle in what was otherwise rising peaks and rising troughs. Pretty strong candles, predominance of white candles, even a lower shadow on the candle beneath it, and two greens on the trend. So I said that in and of itself not enough to move to or change the risk model, but I said it is important to note it. We're going to be alert, not alarmed. And I also said if we were to see any form of confirmation in the next candle, it could be something as insignificant as an inside candle even, that we would then move to 1/3 off or a 2/3 on risk management model. And for those who are playing on at home, that candle there was your signal to do so. So by the end of that candle, you should have then started to move to a 2/3 model. And really by this one, I think we are moving again. Whether you go to a half or a third on, that's up to you. And it doesn't change. I don't think this candle changes the fact, because we're in a volatile bull market. Yes, we've gone from a period of low volatility to high volatility, but it's still a bull market. So we're going to have some risk in the game. We'll go stock by stock tonight, as you'll see. And in my scans on the ASX, at least, you get to see the short list there. That I still think there's plenty of longs out there. 17 longs in my short list tonight compared to, I think it was about 6 short. So we're not panicking, but we're just moving as best we can, case by case, to a lower overall risk management model. We're not getting too bearish at this stage, because ultimately the long-term uptrend is doing its job. That candle from Friday, with that big white candle after the most horrific black candle, it's just how it works sometimes on the Nasdaq. It will look absolutely horrific, and then the next day I'll just print a full white candle. Nothing surprises me there. I mean, even going back to, say, this one here, and the rally that ensued afterwards. So this is why we are still going to have some risk in the game. We're not calling bear markets and stuff like that. I still think there's every chance that the long-term uptrend ribbon does its job, as unlikely even as that might seem from recent price action. Heading over to the Aussie market then, and we were a little bit more circumspect this time last week, and we had said at that point we were going to move to a two-thirds model, so we're taking a third off the table. Seems to be a pretty sensible sort of thing to do. In Australia, would we move to a lower model again? Look, I think you can. I think whether it's a half or a third, I think you're just keeping some powder dry. And yes, today is a good candle. Certainly, yes, it's showing there is demand in the ribbon, and that's good. And we've seen here. I mean, this is why we don't get too bearish. There's literally a black white there, black, and then some whites coming in the not too distant future after that. So again, taking a fairly sensible approach here to take some risk off the table, but not get too bearish just yet. So just to reiterate, in the US, whether you go to a half or a third, I don't mind. It depends on how you feel and do what you're comfortable with. But we're not full risk, are we? We're not two-thirds, are we? And the same in Australia. We're not two-thirds, we're not full. We're somewhere around a half, somewhere around a third. But we will go case by case on the stocks in just a second. Let's finish off with our discussion of the Russell 2000. One of the reasons to be cautious and to not have a full risk position at this point in time is that the real heart of corporate America, which is what the Russell 2000 represents, and it's very much an egalitarian index compared to, say, the Nasdaq and the S&P 500, which are highly concentrated by market capitalisation. The top 10, top 20 really hold sway on those. There's much more level playing field here in terms of big cap stocks having an influence on the index. But it has moved beneath the long-term uptrend ribbon. The long-term uptrend ribbon has changed from green to orange or amber, which means there's a warning. I mean, you cannot get that change. It's maths. So these indicators are just maths, and the maths indicates that we're not in a strong accelerating uptrend anymore. We're in something else. We're in an equilibrium phase. You don't go bull and then bear. It happens very rarely. I can probably count on one hand and have some change the number of times over the last 30 years that I've been watching markets where it's gone from bull to bear instantaneously. And one of them was in 2020 due to the COVID pandemic. And that I would put to you is perhaps the most extraordinary thing that's happened in those 30 years in terms of what markets have faced. So we're not experiencing anything like that. You could say, oh, but Carl, what's going on with Trump and what's he going to do? I don't think he's going to cause a pandemic-style reversal. I don't even think he's going to cause a GFC-style reversal, because ultimately the big crashes, the big calamities that have befallen markets over the last 100-odd years, a bit more than 100 years, is the threat to the system from credit not being able to pay its bills. Ultimately, the solvency of companies, of sovereign states, and I can't see any of that on the table at the moment. So in the absence of those things, and they may well develop down the track, but I would suggest, from what I'm seeing, unlikely. In the absence of those things, I don't think we need to panic at this stage. And what this is telling us is that we're in some other sort of market that's not a bull market, that's not a demand-side market, and therefore have a more cautious approach. And that's the extent of portfolio management model, ladies and gentlemen, because we still, have I said this? We still go case by case on our stocks. We're still trying to find the best longs and the best shorts we can find. We're just now seeing what we can fill our buckets up to. Let's have a whip around the grounds and see if there's anything to push us off this idea of taking some risk off the table and just being a bit more cautious. Obviously, the Russell is confirming. I don't want to look at any of the large cap indices. They don't mean anything to me. Let's go to Europe. And this is another reason why I don't think we're about to experience any calamity. And certainly if you look at too much social media, there's going to be calamity mongers out there, doctors' doom, that will tell you it's about to be the end of the world. If it was, we wouldn't see a really sharp pullback on the Nasdaq and some parts of Asia, and then Europe just not care, because Europe is part of the global economy. So I don't know, I think there are some specific things to certain places that are having an impact. And look at these charts. They're just fine, because if there is going to be a calamity, go back to the GFC, go back to COVID, go back to 87, 29, the oil crisis. There was synchronous market movements. synchronicity across the world in terms of risk assets, and we're not seeing that. That's not even that bad there in Hong Kong. The Nikkei has broken down. Is that a big red flag? Look, it's not great to see the Nikkei break down, but I don't think it's going to push us off anything. We knew this was going down anyway. That's no surprise there. That has turned the corner, and that is not equilibrium anymore. That is a supply-side market, by the way. There's long-term downtrend stuff. Shanghai, and this is apparently supposed to be one of the hardest hit areas, potentially the Chinese economy, and that's even fine. I'm not too worried about that. Some black candles, yes, but not panicking yet is the theme. Heading to Australia, I might skip the indices. I don't think we're going to get too much out of them. To be honest, look, I'll just do them quickly. You're going to see what I mean in a second. Discretionary pulling back, short-term downtrend, let's call it, long-term uptrend, speaks of neutrality. Energy, still short, long downtrends, even those are a little rally there, but that's largely to do with a bit of a pop-up in Woodside, so still going to say short-term and long-term downtrends. Financials, this is changing trend. I think this is more of an equilibrium phase now, so something is definitely going on there, and maybe even that big bank run is showing signs of exhaustion. The gold index is still okay, but we are going to see we've got a bit of supply coming into the gold chart in a little while. Healthcare, I think, has broken down. That is not even equilibrium. I think that's starting to move now into supply side. Technology is more equilibrium now. A lot of that is Wisetech, however, and that's probably one of the reasons why I didn't really want to talk about this today, because earnings has absolutely blown to bits a bunch of companies within these sectors, and hopefully you've managed to get through it relatively unscathed, but I do know there were some casualties and even some of the things we were looking at. Materials is largely sideways, long-term downtrend though. Property breaking down, that's interesting. So we are seeing a few sectors here actually that have been in long-term uptrends but are breaking down. Telecommunications still looks fantastic, but that's the Telstra index, and you can't even really count that. And utilities is edging towards the top of its range, but nonetheless still a range, and that is benefiting from the fact it is a bond market proxy. So bonds have rallied, bond prices have rallied. We've seen yields come down. We'll talk about in a second. That's why the utility sector is improving. Let's have a look at the base metals. Aluminium was firing, but last week the Trump blues, this trade war potentially that's developing. That's probably too strong a word, but we did have a 10% tariff put on China, and we're expecting the 25% on Mexico and Canada to kick in very soon. Copper pulling back also, so you're seeing the impact of that. I'll skip iron ore because we're going to look at it elsewhere. Nickel actually tried to rally, ironically, but pulled back on Friday, still waiting for Monday's print. Lead actually rallying a little bit, pulling back on Friday. Tin has been the most severe pullback, and then zinc actually starting to look like more of a downtrend there, isn't it? We saw the lithium carbonate chart very briefly at the start, still in the doldrums. I don't think we need to spend too much time on that. Let us quickly head over to the trading view screen and just finish off our whip around the grounds, looking at precious metals here, starting off with silver. You might have noticed, however, something we haven't seen on my charts in trading view yet, and that is the relative strength comparative. I spoke to you 2 weeks ago about trying to code that. Last week I updated you, said I couldn't get past this idea of having to reference another security in TradingView. The Pine script, which is the formula language for TradingView, didn't have an equivalent of the AMI broker function, and I did manage to find a workaround. So we do have relative strength comparative. That is every bit the same as what you see in AMI broker. It is even better, in fact, because what I've actually done here is I can double click on this. I can't do this in AMI broker, but I can do it here. I figured out how to do this, so we can double click on this and choose the base security. So the whole idea of this indicator is really neat. What it does is it compares the security on screen up the top to any security that you want. And typically what we'll do is we'll compare it to the benchmark index. So if we're looking at BHP, we'll compare it to the ASX 200, or you could go 300 or all awards, whatever you want, it doesn't matter. But a benchmark ASX index. If we're looking at Apple, we might want to use the Nasdaq Composite or the S&P 500. But we're looking at silver, and before I started today, I thought, well, actually, it doesn't make any sense. I had it on the Nasdaq because I wanted to use it for the US stocks tonight. So it doesn't make any sense to compare silver to the Nasdaq. Why don't we compare silver to gold? And all I need to do is double click on the indicator and then use the little edit button here. I can select any security from the entire TradingView universe, which is substantial, and use that as the base security. And when I select obviously the gold futures contract, which is GC1 exclamation mark, we then see how well gold is doing compared to silver. So even if we look back to sort of a period through here where silver is rising, you might say, oh, that's good, silver's rising, but it's still underperforming gold. It's telling you you'd rather be in gold than silver at that point in time. I think that's pretty neat. Just to demonstrate how it does work elsewhere. Let's say we were looking at Apple. Now Apple's being compared to gold, which I don't think really is giving us a great deal of information. So we would then just simply change that to IXIC, which is the designator for the Nasdaq Composite Index. And we can see that even though Apple's been going largely sideways, it is actually beating the Nasdaq, because the Nasdaq's actually been coming down. So, or even here, that Apple has come down a bit, but it hasn't gone down as much as the Nasdaq. So that is a really neat extra piece of information that doesn't actually use open, high, close, volume volatility. It's comparing simply bits of the price action here to the price action somewhere else. So it's a nice, largely independent piece of information. And the reason why I don't have lots of indicators, you probably wonder, hey, why doesn't Carl have the RSI, the MACD, Bollinger Bands, and half a dozen other indicators? Because they don't give you any extra information. None of those ones that I just mentioned use anything but either open, high, low, and close, which are price points. And open, high, low, and close, guess where they're showing up on my chart? They're in my candlesticks. And if we're looking at change over time, well, that's what my trend ribbons are doing. And I've got volume, and I've got volatility there. I've got those independent elements. So the reason why I don't have a bunch of other indicators is because I think they just obfuscate the obvious, which is, well, what is the price action doing? So I'm a price action analyst, I'm a trend follower, and I don't need those other things. So I like to keep it very simple. I think that's the other important part of the approach. But relative strength comparison is a largely independent piece of information. So if you can put an independent indicator on something that is not just duplicating something that's already there, then I think you're adding value to your technical analysis. If you're just putting on an RSI and then a Bollinger Band, well, ultimately they're in many ways doing similar things. Well, they're based on the same information. I shouldn't say they're doing similar things. They're trying to do different things, but they're still based on the same information. So we have the relative strength comparative. We also have volume with my average volume, the one I like to use. And we have the optimized true range, not the average true range, because I think Wells Wilder got it wrong with his calculation. That's my opinion. But if your standard one is always the Wells Wilder true range. I use a different one, which I think is better. I won't explain to you why, but that's my version there with the average. Now, you're probably all wondering, when do you get these? In theory, I could give them to you from tomorrow because they're done. Like, I've absolutely nailed these things. The only thing is I'd have to give you access 3 times because they're 3 separate indicators. So most of you already have access to this. You know the process. You send me your username, or I guess I could just give everybody who's on it. But I have to literally I'd have to copy and paste or type everybody in one by one, and that might be a bit tedious. So maybe just give me another week. I'm going to see if I can find a way to combine them all into the same formula. My early investigations are that this is not going to be very easy to do, but I think it's better for everybody because then you can just load up one indicator and it's all there in one place. So just bear with me, give me another week. Worst case scenario, I promise you, looking you directly, we'll just do it the hard way, and I'll just give everybody access to these individually, even though it'll probably take me a few hours to do. So that's good news. Good news, I figured that out. We were talking about silver at some point, and we'll just leave that as Nasdaq for now, because when you're comparing commodities to other things, it probably doesn't make so much sense. But we do have gold. Thanks everybody for all the thumbs up and the clapping there. It is a pleasure to give you access to these things. I have always, well, actually, it's not always. It hasn't always been the case in my life. There certainly was a period of time where I did, I did make a living out of, being employed by a company, charging for my expertise. But I did have got to a point where I figure that you, at some stage, you do consider your own mortality. And I honestly think that if I was to drop off the face of the planet tomorrow, then all the stuff I've learnt over 30 years would go with me. And that, at some stage, I realised that it was a very scary prospect. So I undertook this task of trying to teach people, and hopefully you agree, not just here, but in my rantings on Twitter and X, that it is a very genuine crusade. Crusade's probably the right word I'm on to change people's thinking about investing. So that's why we're here. Let us go on with tonight's presentation and look at gold and note that it is a short-term pullback in a long-term uptrend. It could get more sinister. I mean, we saw one black candle on the Nasdaq, didn't we? And we said, oh, well, probably nothing to worry about. Well, I'm not sure if I said that. I said it's a problem. If it's confirmed, then we need to worry about it. And that's what I'll always say about big supply side showings, and that's what that Nasdaq candle was. We've got sort of 3 out of 4 here. And the 3 out of 4 I'm talking about, that one, this one here is live, so discounted, it doesn't exist to us. But certainly if we look at that one, that one, that one, and that one, I would argue that they constitute a significant supply side showing if we blend them together. And in and of itself, it's not a big deal. You're going to have supply side showings in good bull markets. It's just whether it gets confirmed or not. So that one, okay, is confirmed. Well, it's actually somewhat confirmed by that little upward shadow. And I don't know if you remember, last week I spoke about this with the Nasdaq, and I said, look, even if it's something as innocuous as that, just an upward pointing shadow within the range of this candle, that would be confirmation, and you can see then what precipitated after that. But certainly this candle here confirms that one. So let's call this move the move. Hopefully we get a bit of a pushback up tonight, and then it's what happens after that becomes important. And if we only see confirming white candles, no, there's nothing to worry about. But if we see something more sinister, then we can have a more severe pullback towards that long-term uptrend ribbon. But that's all we're kind of thinking of here. I think being a little bit more neutral on the gold concept, let's call it, is probably a good way to be. Some of the other problem for gold, I think, is that rates have come down. And gold's come down, and that's not usually the way it works. So gold loves lower yields. We've had lower yields, and yet gold's come down. So putting aside the technical aspects, just from what makes sense to me, that's a concern. So when gold should be going up and it's not going up, it's confirmed by the candles and the supply. The market's telling us that something's not right, but also it's not fitting with our classical understanding of what gold usually does. And I think you get to a point where gold is risk off, risk off, risk off, risk off, and then in the same basket as everything else, up to a point when people are trying to pull money out of the market. Okay, when gold doesn't get a bid when that happens, then that's usually not good for gold. Okay, go back, listen to the recording, and listen to what I said, and it's an important little tool for you to have in your tool belt when understanding how gold moves. Apart from that, this stuff does make sense, because it's about Trump, tariffs, it's about uncertainty over global trade, global growth, and order of magnitude, we could see half a percentage point shaved off global growth. I mean, that's order of magnitude for most of the estimates I've seen. So it's not baby in bathwater stuff, but it's enough to bring copper back, isn't it, in a short-term-ish way. And we saw long-term uptrend, but iron ore got pasted. Uranium, just follow the dots there, has flattened out, so that's actually good because everything else has come down. Natural gas has pulled back, but not a disaster, still uptrend there. And Brent crude has also broken down, and these things are consistent with potentially slower global economic growth. So that, I think, is enough of a overview once I quickly do the bonds, as I nearly forgot. And these are the falling rates we talked about. So we have discussed here many, many times that typically lower yields, lower market yields, risk-free yields are good for stocks, but only up to a certain point. When you pass that inflection point of lower rates in a strong economy are good. That has to be good. Strong economy, strong corporate profits, but lower rates is just icing on the cake. When we go to, well, the economy's weak and rates need to be cut because the economy's weak, then that's not good for corporate profits, and therefore that can't be good for the stock market. And we did reach that inflection point. We talked about it a week or probably even 2 weeks ago now. Aussie bonds, not too bad, but some of that would be RBA jawboning that markets shouldn't expect any further interest rate cuts. But overall, I think we are requiring a more moderate risk position, but still actively looking for the right trades where we can find them, and that is a nice little segue into the next bit, which is offline requests. which if I can find them are here. Somebody has got their mic open. Let me just shut that down. And I think that has fixed it. I'm going to go to Justin, who has for us 3 stocks, and then I'll get to your online requests, FBU, and obviously we need our candlesticks back because we can't do anything without them. Justin, I did see this in my scan tonight, and I paused on it, I stopped on it, and I looked at it, and you all know I love a good turnaround play, and that's what this is. And how do we know it's a turnaround play? Well, first things first, we can't have a pink trend ribbon. Okay, so this cannot be pink. Let me undo that, and let's just go for boring old black and take that off. So that can't be pink, okay, because we just want not long-term downtrend. It doesn't have to be a long-term uptrend, because if it was, it wouldn't be a turnaround play. If it was already green, well, that's a continuation setup. That's something else, right? So it's not long-term downtrend. That's the first part of this turnaround setup, okay? The second thing is we should have a short-term uptrend, because we're looking for at least short-term demand-side control. And everything I do boils down to who is in control of the market. So the demand side is back in control over the short term. Well, how do you know the ribbon's green? That's it. Don't ask any more questions. You don't need to overanalyze it. Who's in control in the long term? Well, actually, potentially no one. And that's good news, because it was the supply side for so long. It's a turnaround setup, everybody. That's the point. We're turning around from what we had before. And there are turnaround setups for going from up to down. We'll probably see some of those tonight as well. But we need at least a short-term uptrend, ideally. And look, there can be some times where we are consolidating, and maybe you get a peak that's slightly lower than the other one, or a trough that's slightly lower. But prior to any sort of consolidation that we've got here, common sense suggests that we should have rising peaks and rising troughs, which I'm pretty sure we actually have here. So let me just find, well, if I go here, starting from the actual low, it's always a good place to start. Why not? Logical place. Coming up here, I can't see if that low is lower than that low. I don't think it is, but certainly we come in here, and that's it. They are all the peaks and troughs that are relevant. Certainly we have rising examples of both peaks and troughs. And even better, this is a bonus. The last trough, which is there, is well above the second from last peak. So not only have we got rising good price action, not only have we got the right price action, demand side price action, we've got good price action as well. The next part of the turnaround setup is that we should have ideally a push above the long-term trend ribbon, because for so long, that long-term trend ribbon has been acting as a zone of dynamic supply. It's been pushing price down, pushing price down, okay? Pushing price down. What we want to see is now that it's pushing price up, okay? This is how things turn around. What we're doing here is we're making an argument. It's like arguing in front of a judge. Okay, my wife said you should have been a lawyer. You would have been very good at it. But we are gathering evidence here to prove beyond all reasonable doubt that there has been a shift in the balance in the demand supply environment. Okay, so we've gone from supply side control through equilibrium into demand side control, and it's early. It's early because we don't have, total, unequivocal proof of long-term control yet. But the fact that this long-term trend ribbon is acting as dynamic demand is our very first piece of evidence that that's the case. Okay, so with that dink to the long-term trend ribbon and with everything else in place, it then becomes a turnaround setup. Now we can have higher quality in terms of price action, certainly in terms of move above the long-term trend ribbon, because you've seen me put some in that have moved into the trend ribbon but have done the dink. Okay, so we're amber, but we're in the ribbon, done the dink, but the candles are great, so they get in. Okay, so there are very, very slight variations of the theme, but it comes down to you on trying to find the best of the best. Certainly getting above. Shallow pullback on the dink, good candles, and we're there. As extra bonuses, if you've had a nice base pattern, because the base pattern comes into potentially the aggressive setup. We might get to one of those tonight. That's a bonus. So remember what we said. Why are we doing this in the first place? Well, we want to be able to prove to the judge that we have gone from supply side to equilibrium to demand side. Okay, and every mug out there on the internet will tell you how to pick the bottom. Not me. not me. That's not how I operate. You've never known me to pick the bottom, and you'll never hear it from me ever. I will never tell you to buy a chart that's still in a supply side market. But this now is as bottom as I could get. Does that make sense? This is an example of me picking the bottom. This is how I pick bottoms. Okay. So the reason why I'm talking about this is because Peter, this is a question from Justin about FBU, but Peter did say, hey Carl, the reason why people might be getting confused about these setups, because I did had a crack at you last week about giving me, everybody saying, oh, this is a turnaround setup. And I was like, well, no, it's not a turnaround setup. Well, this is an aggressive setup. It's not. And Peter said, hey, maybe people are confused because, we need some more explanation on what they are. And there are no checkbox systems or rules. I don't send you those because, you know what, we just have some fun in webinars on Monday night. I don't run any courses. That's not what I do. So you kind of get, unfortunately, what I do. And that's it. So I'm sorry, but I'm here to explain on Monday night. You got my full attention, ask questions, and I'll spend as long as it takes to help you out with it. So hopefully that's on tape now. That's great. That'll sit there for as long as it needs to, and I'll put little asterisks perhaps on the YouTube video, and you can bookmark the video as well if it helps. So other things that can make this stronger, obviously the base pattern. Within that base pattern, looking for volume and volatility signals that tell us, because what we want to see is a changing of the guard. This is all about a changing of the guard, yes or no? Do you agree? Everything I've talked to you about, the changing of the guard between supply side through equilibrium back into demand side. And that volume helps that change. It facilitates the change. It tells you that a change has been made because the only way to get the supply out, the people who didn't want to be part of this stock anymore, and to get their shares in the hands of people who now do want to be part of that stock, is through volume, is through those blue bars and big blue bars. That's the changing of the guard. That's important as well. And any sort of volatility events can, make it happen faster. There's a better word I was looking for. Expedite. Can expedite things through large volume because it makes people want to act. Okay, we just want people to act and finish acting. Get all the supply side actors out. Get all the demand side actors in, or start to get them in. Turn the tide. So making a setup better, higher quality. Let us keep moving. Let's not keep moving just yet, because I need to answer Justin's question, which is, well, Carl, what do you think about FBU? And I think FBU is a textbook turnaround setup for all the reasons I've said, but the only reason why it didn't make it into the shortlist tonight, Justin, is I just want one more. Give me one more good candle. Today's candle, I'm going to delete all this stuff. So I just want to focus on this candle here. It's a good candle, don't get me wrong, long lower shadow. I felt it could have just closed a little bit better. And because this has been such a bad stock for so long, it was in my short downtrend list so many times, I remember. I just want it to prove to me. And you could go on that, Justin. So if you think that's a good enough candle, because it is a demand side candle, and everything else is in play, then tomorrow add 1/3 to it. I want just one, give me one white candle, just give me one high close, and then I would happily do it from there. And you will see it in my watch list that will occur potentially from Tuesday morning. Okay, so let us go, in fact, not Tuesday morning, Wednesday morning. Let's go to your next one then, Justin, SXL. And look at this, there's another turnaround setup, isn't it? So we have rising demand side price action. We have a green trend ribbon. We have an amber long-term trend ribbon, or not downtrend. We've got a pretty good base pattern. I think we certainly can see those phases coming through. We have had a little bit of a sort of a volume event down here, but not substantial. I just think the sellers just sold. They were out, and I wouldn't say there's rampaging demand coming back in, but certainly enough to turn it around. I must admit I didn't see this one today, and I can see why I didn't see this today. It actually didn't come up on my scan because it hasn't met the minimum turnover filter. Look, I have a minimum turnover filter because I put those lists up in front of hundreds and probably more like thousands of people, so I need them to be fairly liquid, otherwise people would blow them to bits. You don't need to use a turnaround filter, so if you like this one, I have no objections to it. Can't fault Friday's candle on what was a bad day for the rest of the market. We can see that in the relative strength, the comparative. Just how much better than the rest of the market this has been doing. So happy to go full risk position if you've got, or plus 1/3 if you don't. So it meets all the criteria. I might not do this one just on the basis that I think we'll find better setups out there today. But it's good, don't get me wrong. I think we might find some cleaner price action, less overlapping candles, a bit more liquidity, a bit more interest. That's all. But certainly textbook meets the setup. I don't want to put you off it in any way. As an individual, nobody here is going to tear that one apart. The third one for Justin is GG8, which actually I don't think is in this list. It's fairly new, and I must admit I need to update that list. GG8, there it is there. So this is not a turnaround setup anymore. This is a continuation setup because we're double green, obviously. But we do have a good price action, demand side price action, rising peaks and rising troughs. I won't draw them in, but I think it's pretty obvious. I would say predominance of demand side candles. I saw this on Friday when I wrote the evening wrap, but I didn't put it in for today because of the upper shadow. And I do like the high close, or do prefer to have a high close, but everything else checked out. So really all I needed was a high close. And I think today I've got it. It could have been better, but I did run this. I am running this tonight in the watch list. You can all see the watch list. I'll show you where to get in a second. And it actually did make the short list. If you're wondering where that watch list is, I have given you links, and I put them in the email I send you each Monday night with the link to the recording. Or do I? Do I? I better start including them. But certainly I send you to the video. No, I send you to the tutorial where you can watch the video that tells you how to do it. I think that's sufficient. But if you go to, for example, downtrends, these are tonight's downtrends, and we might as well look at them because we're here. But they look pretty terrible, don't they? There's not that many of them. 4DX, CNU. So if you want to translate downtrend, the word downtrend, look, I'm happy to take short positions in these. If you can short them, you might not find them on all of your trading platforms. CYC, IFT, and we can see that trends are rolling over here. So this is a turnaround setup, but going from demand side to supply side. But it has done all of those other things that we discussed, but just flip everything on its head. JIN is more of a continuation setup on the downside. LIC, this is why we don't muck around with those long-term trend ribbons, because until we're satisfactorily above them, they tend to do a very good job. Another turnaround setup there on NXL. PN is continuation, and then Propel Funeral Partners. How about that one? Beginning of a turnaround setup there also. And then we also have the uptrend list, and I think this makes life a lot easier for you. That one shouldn't be in there. As we copy and pasting in the wrong thing. Adriatic Building, happy to add risk. This was the Global Defence ETF. I thought, well, that's really neat. You can probably understand why that's starting to go up. Austral is a picture of strength. BC8, I still think it's worth adding. I can't see any reason why you wouldn't. Very strong chart. Pulling back, holding, moving out of the short-term uptrend ribbon. CHC, same sort of thing. CPU, same sort of thing. CYL, same sort of thing, to be honest. You can see why, probably see why I like these. That's a nice turnaround setup there, pushing above the long-term trend ribbon. Long-term trend ribbon is orange, DINK, candle, all textbook stuff there, turnaround play, data free, developed global. We talked about this, I think, a couple of weeks ago. That's moving along pretty well, pulling back. Nothing goes up in a straight line. EML, nice little turnaround setup again. And there's that gorilla. I won't do them all. I think we get the picture. Let us keep moving through your requests tonight, but hopefully helping everybody understand how everything fits together here. Thank you for your three, Justin. If you're unsure as to what my intentions are here, FRP plus 1/3. Let us go to your online requests. Avant always gets in first. Hello, Avant. Sudesh, thanks for your time on a public holiday. Much appreciated. No worries, Sudesh. Had my fun today. Had a good day with the family today. So no problems at all. They're all on their devices right now. To be honest, they don't need me. My kids are 15 and a half and just turned 13. So at 7:39 my time on a public holiday Monday, they're not doing homework. That's the other time they need me. And no, they're fine. Instagram, Snapchat, and whatever. Let's go to XRF for Avant. XRF Scientific, which has been in the list a few times. Oh, look, honestly, I hadn't seen that pullback and unfortunately I think just got caught up a little bit with what's going on in the broader market, and possibly I don't know, some earnings maybe as well. But I think it's come back pretty well, Avant, wouldn't you agree? I mean, that candle there stopped the rot. Was there a reason to be out of it before that? This candle here is not great. And if you chose to knock a third on that, I wouldn't argue with you. I might question, well, give it a chance at the short-term trend ribbon, but that's as strong as I would have argued against a minus 1/3 at that point. And as you can see, the long-term uptrend ribbon did turn out to be right. I mean, Mr. 2020 hindsight there, but just see how they go at the long-term uptrend ribbon. We say that consistently, and it's done pretty well since then. So that's a good candle. Today's a great candle. I don't think you need to do a whole lot about it, but what that pullback gives us is a great reason to take confirmation even more seriously. So let's hope it continues up. But if it starts to throw in, supply side candles, obviously that would entail a lower peak. Any of the reasons we know to be consistent with, the signals we know to be consistent with supply side activity or supply side control at a point that is lower than this peak here. Right, that's obviously the key point of supply going forward, and we want to know how strong the supply is there. So right now, none of this matters because we're here and we've got three really solid demand side candles at the short-term uptrend ribbon, which we expect to be an area of dynamic demand, as it has done so many times in the past in a long-term uptrend. Okay, so I'm just giving you some ideas of what to look out for in between now and next Monday. When you ask me next, but for now, we are FRP. I don't think we need to add a third. I'm concerned about this washout here. So there is supply in the system. So I think caution is required, and therefore, look, happy to stick with the risk I've got on the basis that I'm going to be extremely vigilant going forward on supply side confirmation, but I'm not adding a third, I think is the message there, even though we've got three decent candles out of that short-term uptrend ribbon. I say, hey, Carl, you just said it's okay. Yeah, I think it's okay to hang on to. I just don't think it's okay to add risk to, because I don't like that big bloody black candle. So that's how I'm thinking about that one. Okay, let's go to SGH. Continuation, I think almost a very boring chart, isn't it? Happy to hold this one. I think today's candle is perfect. It's the exact sort of candle we want to see in the short-term uptrend ribbon, where we hope to see confirmation of demand side control or resumption thereof. But not enough, I think, same as the last one, not enough, I think, to add risk to this just yet because of the quite concerted supply side showing, which has actually created lower peaks and lower troughs. Okay, and actually I'm glad I showed you some of the other charts tonight, because I think these last two are great compare and contrast. So yes, FRP for me on this, it is subtle, but I think a really neat subtlety to say that that's an FRP and the last one is FRP. Okay, but not adding a third. And yet we look at some other things that I put in tonight, like, not that one, that's Sky and Gangbusters. I know CPU is one, actually was in the broader list. Let's have a look at CPU. In fact, why don't we go back here, and it'll be even easier for me to find. So CPU, so compare that. Why would I put that in the list? I think a pretty benign supply side showing from this one. Yes, well, that candle's not ideal, but it's not big and it's not black either. And we've got a few white ones already appearing in the system. So this is why I would add risk. This would be FRP, but plus 1/3, whereas the other two are probably FRP and just wait and see a little bit. Wait for confirmation of demand side control. What was another one? That was like even that one. There's no sharp supply side pullbacks. It's very gentle. It's all very orderly. ASB was going gangbusters. There were others that were a bit more sort of like, well, that one's, yeah, well, I didn't like that one, probably qualifies. So that's a plus 1/3. That one is, well, even that one. So we want shallow pullbacks, white candles, adding risk. Sharper pullbacks sharper pullbacks. White candles, not enough. We want confirmation. So we're going to have confirmation of, not that one, okay, I'm getting to it, XRF. So this is one where we're worried about this, and before we can add, we want to see the demand side confirmed. Okay, whereas the other ones are shallower pullback. I'm hoping that makes sense. I may have overcooked that explanation. So this, I can't add to this. I can't add to this until I see confirmation of the demand side. So I know there's kind of a theme every week, and tonight's theme I think is confirmation, isn't it? Whether we're waiting for confirmation that the supply side is in control, or here we're waiting for confirmation that the demand side is still in control. Okay, because one candle isn't enough in the face of the selling that we've seen. Okay, let's go to, San has got a few here. BHP, which was breaking down until today's candle. I mean, today's candle is a nice turnaround. But I see this as just very sideways. I don't think you've seen this in my downtrends list, have you? You certainly haven't seen it in my uptrends list, but I'm pretty sure I haven't run it in the downtrend list for a while, simply because I just see this as equilibrium. It's just in a phase of equilibrium within a supply side market. And two things could happen here. Well, actually, three things could happen. It could stay in equilibrium indefinitely. It could break through this side, supply side could take control, or it could work its way back up here, and we know what that would require in terms of a turnaround setup. Odds are typically supply side overwhelms the demand side and down she goes. But until then, it is just very much a sideways market. So who's in control? Don't know, don't care, and it's not really giving us any signals to do much of anything. San asking for stocks, but not telling me why he's interested in them, because yeah, I mean, look, you know, I was on Ausbiz a lot, and I think if you just want to ask a general opinion, call up Ausbiz and say, hey, get them to analyse BHP, and somebody will give you a fundamental view on it. You know what my view is on this thing. I've got a red. I think I've got two reds. I'm not buying it. So what more do you need to know apart from what's on the chart? GMG has broken down. So this has been in my downtrends list, because I believe that this is changing trend. So we've got the opposite now of the turnaround setup. So if I turn this upside down and I changed all the greens to red and I changed all the black candles to white candles, you'd get the identical turnaround setup for a long, but this is now a turnaround setup for a short. So we are moving into the long-term uptrend ribbon. We are getting confirmation in that ribbon that it is no longer acting as dynamic demand. Okay, we're breaking through, and then it is beginning to act as dynamic supply. That's that move here. The candle is an upper shadow reaching into the zone. Look at this candle here. It tried to rally. It tried to push back in. All the bargain hunters came in. Isn't Goodman a blue chip stock came in? Aren't data centers fantastic came in? Isn't this a great long-term value? They all came in. But what did they meet? What did they hit? They hit supply. And that supply overwhelmed them, you know, significantly above average volume day as well. So yes, a bunch of cash came in to buy, but what did that cash find? That cash found stocks, and far more stocks than that cash actually had motivation to purchase. So this is a really significant signal for me here, and I'm pretty sure I ran it as a feature chart on that day. Correct me if I'm wrong. So, you know, you're really doing a few bucks better by not holding Goodman if you had acted upon that. And I think, therefore, this is turned the corner. This is no longer a bull market. This is, at best, equilibrium, but I think probably more like at the beginning of a supply-side move here. How far down that goes, I don't know. That could be it, for all I know, because I can't tell the future. But as long as candles continue to be black, as long as price action is supply-side in nature, and as long as the trend ribbons continue to act as areas of dynamic supply and not demand, I would prefer to stay the course on this. So, San, you should clarify here. You should tell me, are you looking at these for longs or shorts? Because you've given me two really potential shorts here. And if you are, then I'm fine with that, because you are applying the model correctly. And that's what I'm concerned about in these sessions. Are people understanding my rantings and ravings and applying them correctly, or are they not? Because if they're not, then it's my job to try and get them on the right track. So this is another one which I ran on Friday, I'm pretty sure, for the first time. Or maybe I ran it here. Maybe I ran it there. Or maybe I ran it there. maybe, I don't know, I'd have to go check, but it certainly was in the offing after this big move. We know what gaps mean. We know they're extremely indicative of a shift in demand, in the demand-supply environment, in the thinking among the parties that play within. And this is a big supply-side shift here. And the demand side, what did they have to do about it? Really very little. They had very little ammunition. That's cash. That's motivated cash. And there was plenty of motivated supply. And then we get days like this, where it's trying to rally because you've got all the bargain hunters coming in, this knee-jerk reaction from so many Australian investors, and I shouldn't just pigeonhole Australians, but I do think they're very good at it. Oh, did you see how much XYZ dropped today? That's cheap. I better buy some. It'll bounce, and then I'll get out. You know, I'll just make a few bucks on the bounce, and I'll be out. 10 years later, they're still holding XYZ for that little bounce, aren't they? But if you could read a chart, you could read candlesticks, you could tell, you know, there's just a wall of supply here. And I think this one also has turned the corner as well. And you know, much loved, much adored and revered blue chip stocks. And I think we've got some issues here. So given we're going 3 from 3 and now we're 4 from 4, I reckon Sands probably talking about shorts. And I can't see any reason not to be short those things. BHP is probably the one I would least want to be short because ultimately it's going sideways. But you heard my opinion there that if my experience is correct, then the supply side tends to find that control again. Okay. Mineral Resources is a train wreck. A great day today, though. Don't get me wrong, but not enough in and of itself that day here. I don't know what that was. Is it an options expiry? I wouldn't know. On a Friday at the end of the month, it was probably options expiry, wasn't it? So that was expiry, and then that's the day after expiry. And no doubt there would have been a zillion contracts traded, put contracts being exercised at 30, 35, 40, 45, 56, 55, 60 from very astute investors who covered their asses by buying puts and are now offloading those shares onto people who are sold puts, were silly enough to sell puts on this, collecting premium. It'll never go down there, they said. And now they are copying and owning MinRes shares. Today's move is impressive. Hey, big white candle engulfing, above average volume, and certainly something to watch in terms of demand side control. Just putting a fingerprint on the chart, but requiring significant confirmation. So look, if I was short Min, I wouldn't see any reason not to be short it based upon that chart. Okay, moving to Adonis now. Thoughts on SNL? And I hate to do this to you, but we do have to have it into these things at some stage. So given it's 10 to 8, can we maybe just stop putting any new ones in there? I can see Perry's got the last bunch there at RTX, and I'll work through those and work back up, and that should get us through tonight's session. But we're going to go now to Adonis, who's asking about SNL on screen. It's a little bit of a zebra at the end there, but still very much in trend, Adonis. Look, I trust you to manage this one. I know you know the system very well because you've been, you're a long-suffering listener of mine, Adonis. But yeah, look, today's shadow I think is important. I don't think we want to see it close beneath there. And if it close beneath there, Adonis, with a black candle, I think it would prove to us beyond reasonable doubt. So if we saw something like that, and we'll fill that in. Look, I think, how could we continue to hold a full risk position? Does somebody want to bang the desk and say, hey, Carl, no, actually, when you see that, you really should keep the faith and stick with all the shares that you've got? Or is it more sensible to say, well, when you see that, I don't think I want to hold a full risk position. I think I'm going to go minus a third first and ask questions later. I'm going to fire off a third. Would you fire off 2/3? Well, it's also closing beneath the short-term trend ribbon. That's not ideal. There are a couple of points of demand here. So there's one there, there's one there. These are all little troughs you can go check. Today's quite an important candle. A lot of volatility on today's candle, a lot of volume. Market trying to decide. Maybe there's earnings start, I don't know. But I don't think we want to get beneath that level. So is it 1/3 or 2/3? And this is where your common sense comes in. You might say, no, Carl, look, I would be comfortable only doing 1/3. I think I'm more of a 2/3 kind of person on this one. But I also think that that long-term trend is pretty good, and it is a bit of a zebra, and it is a bit volatile. So for me, I'd feel more comfortable just keeping a bit of skin in the game on this one and seeing how it goes. So that's how I'm going to handle it. And you know what? If it doesn't work out for me, if it rockets straight back up, I've still got a third. And if it keeps going down, I'll be pretty glad I got out of 2/3. So, you know, there's the technical analysis part of it, and then there's the risk management part of it. And the risk management part of it, I know it depends on the technical analysis part of it, but it's also a lot of common sense, I think, based upon the technicals. Let us go to Adonis's next one, which is... actually, no, it's not. His next one is a US one, so we'll keep moving. Adonis saying, the most insightful and factual market analysis, bar none. That's very kind of you, Adonis. I did have something today. I'll send you the link. The one of the co-founders of Livewire sent this to me, so you do know I do moonlight. I'm a gun for hire. Write stuff for financial websites. You know that, and it's a pretty cruisy gig. I don't know if this will play for you. The Montgomery. Can you hear it? Just give me a thumbs up if you can hear it, or you can't hear it. Can't hear it. Okay. I'm not sure. I'll send you the link. But you might have saw him here. The quote is, technical analysis is garbage. It doesn't work. Yeah, Roger and I go back a little bit, and this is very consistent with his thesis on the world. Yeah. Let's keep moving because we were talking about technical analysis. I'll send you a link. It's good fun. Let's go back to here and do some TA. And look, I think he does make a good point. You know, I think there's a lot of bad technical analysis and bad technical analysts out there that are trying to make money off you by teaching you something which you think you need to know, and trying to make it really complicated when actually it's not. So I agree with him on that point. But whether technical analysis is garbage or not, we're probably going to differ on our opinions there. We have debated this in the past in various media outlets. Let's go back to Adonis was making some kind comments. Forever grateful, says Huzel, for your teachings. Blessings. Thank you, Huzel. Absolute pleasure. And you've been very, very kind with your support as well. Michael's saying, you're asking for my thoughts on SVR, which looks really good. Actually, this is in tonight's shortlist. You might have seen before there, Michael. SVR. Oh, I didn't shortlist it. I'm looking now. I really like that chart. And now I'm trying to figure out why I didn't shortlist it. Oh, look, I can kind of see it now. Like, it's overlappy, isn't it? It's prior to this, you've heard me say that the leopard doesn't change its spots. I know we've got leopards, we've got zebras, we've got bulls, we've got bears. The leopard spots here are quite overlappy and price action is a bit ugly. But sometimes they can go through those phases and start to move and push and move because we get that consensus. So that overlappy is not consensus, for want of a better way to put it, and then the clean moves. Anytime we see clean moves, that's consensus. And we're consensus traders. That's what we want. But I do think this is a great candle, and I think I know why I didn't put it in. I couldn't see the volume. They're not that I couldn't zoom in, but it just didn't have that sort of oomph that I wanted there. That some of the other ones did. So look, a very, very strong setup. I contemplated it, and normally I would go very quickly from a scan list to a short list to a short list and short list. Okay, so when it gets contemplated, it's very much line ball. But I can say with absolute confidence, yes, FRP. I'm glad you spotted this one, because if you're spotting this, you're seeing what I'm seeing, Michael. So that's what I want. That makes me feel good that you're actually seeing markets like I am, because that's why we're here, I think, as to learn to do it the way I'm doing it. And you can go and learn how to... Roger does it as well, with all due respect. Go and listen to Roger and learn how he does it too, and there's no harm in that. But that's telling me you're seeing it the way I'm seeing it. And DVP, the next one as well. In fact, look at this. Michael's reading off half of my shortlist here. So this was another strong candle. Actually, look, there you go. It didn't have the volume confirmation, but it was a really clean candle. And it has cleaner price action before that. So I felt that was a stronger setup than the other one. But as I said, the other one is still very strong too. The other thing I liked about this is that I think we have dealt with this supply zone because we've been in it. We've been in it for a while. So I think we've done that one, and now we can go back up and look to the next one. Whereas if we go back to, say, SVR, which is now not in that list, but we go to SVR, there's still a little question mark over this point of supply. So just helping you, Michael, just compare and contrast why I put DVP up a notch compared to SVR, because I should be able to explain those things, because if I can't, then there's something wrong. But happy on both of those, and if you don't believe me, let's go DVP and just for the record, because I don't delete these charts, plus 1/3 there. And your next one, which is EML, which I'm pretty sure I did put in that list, because you can see it there. That's the shortlisted shortlist. So you can see I go scan results, then I go shortlist, and then store 2 is always my longs, and store 3 is always my shorts, and store 1 is a temporary shortlist. So it goes. They go from here, they go to here, they go to here, and then they get hived off to either here or here. If that makes any sense. So this one certainly I like very much, because it's actually taking out this supply here, so that puts it above SVR, doesn't it? It's got really clean price action, really clean candles, and a nice volume push. So interest, supply removal, demand side dominance, dare I say. So I think that puts it even above DVP. So I'm so glad you gave me those 3, because I think by comparing and contrasting those 3 in particular, hopefully all of you can see, okay, well, this is how I can just order these things, because it's daunting to have a system. It's daunting to have a system that gives you a bunch of things to look at, isn't it? If you never had a system, that's okay. But when you have a system, you've got a bunch of things to look at. Now you have to actually turn those things into trades. And let's go. It doesn't own them at the moment, looking to get back in. I'm happy on all 3 of those. Let me write that on here as well. So let's go FRP plus 1/3. Let's go to the next one there, which is MP1. MP1, which this is Robert. Okay, Robert, I don't know if you all just saw the list, but there you go, MP1. So I think, so what I love here, and you might say, oh, Carl, that's a pretty big black candle. Look, I don't disagree, but look at the lower shadow. It's telling you that there's demand there. Okay, that one's a little bit disturbing. That one sort of evens it out and a little bit ho-hum. But what I really like, and I didn't put it in on Friday, I don't think I did, because that one candle, yes, it's a demand side candle, but it's not quite enough. And today I've got the white bit on it, and I think high close. We've had 2 days above average volume there, some volatility, but you know what I'm waiting on this one. Actually, the other thing is that's really important to point out is you might say, oh, that's a black candle. That is not a black candle. This is a big white candle, because actually it starts down here. So this is a big white candle that has actually a shadow up there, if I'm not mistaken. So it's opened here. And closed there. So that would be, I'm mixing it up. But anyway, it's got to start down here. If you take the previous day's high you take the previous day's high as the open, that's the high, and then that's the close. So yes, it's a white candle with an upper shadow. So that's a huge demand side showing, major shift, tectonic shift in the way the market's thinking about this. And all I'm looking to do now is find a way in. It's a turnaround setup. In fact, I ran it as a feature trade. If you remember, we talked about this almost the day before or 2 days before. We said I wanted to see a white candle to add risk to it. I'm not sure what that 1/3 is. It might be just a typo. I meant to type plus 1/3, because on this day here, and I actually wrote an apology. I said, I think we discussed it. We did. We discussed it as basically whether we should get it on that candle. Correct me if I'm wrong. That was the candle we looked at it in session. And I said, oh, look, that little upper shadow, it's just keeping me out. But I said something along the lines of everything else checks out. Like, this is a turnaround setup. This is a perfect turnaround setup. And that's just keeping me out. And then that's the candle. I saw it. Of course, you won't see we see the list the night before, but the market's closed. So you can't actually act upon it until the next day. And I did issue an apology of sorts on Twitter and say, look, hey, I'm sorry. I probably dudded us out of what was a good turnaround setup by just wanting that extra confirmation. And it was earnings the next day. I couldn't know it was going to do that. But that's the perfect candle. That is the perfect demand side candle. And you saw that white candle I deleted where I was saying that's what I wanted to see. And I'm sure, go check the tapes, I'm sure I wanted that to be plus 1/3. Plus 1/3. I'll take it off because I don't think it's relevant now. What's relevant now is once that occurs, that big move, I'm just looking for demand side candles after a pullback to get me in. So we had a little bit of a pullback. That initial sell the pop is out of the market. So you're going to have, don't forget, you've got a bunch of traders in here that have been stuck in it for ages. Okay, so they're finally getting their money back. All the people who bought in here, and were there lots of people that bought in here? There were. They finally got their money back. They finally break even. Their prayers have been answered. Please God, if you just let Megaport go back up to $12, I promise I'll get out and I'll never trade Megaport again. Oh, thank you God, I'm out. But what they're failing to see, they're trading based upon their P&L. They're not trading based upon whether demand is in control or supply is in control. And just between you and me, that's what you used to do as well. You used to trade based upon where you got in or where you got out. You used to say, oh, I got it at $10. It's now it's $9.50, I can't get out because it's not $10. Oh, now it's $10, I can get out. All right, I've undone that bad decision. You don't trade like that anymore. You trade based upon, well, what's the demand side doing? What's the supply side doing? Okay, well, I should need to be in. So they're out now, and we're looking for signs that the buyers who started this move, who know Megaport's worth $20, $30 a share, I don't know, whatever, right? They just think it's worth more. We're looking for them to come back in and start buying again because that pullback's complete. And they're the candles that I want to see. So for me, FRP plus 1/3, I'm just trying to give you the rationale, the way I think about things. I don't know where this is going next after all of that explanation. This could be the worst possible time to buy. And it could be down there next week. I don't know that because I can't tell the future. But all I can do is give you an explanation to give you a rationale, nothing more, rationale as to why I would act in a particular way, and that's why. And if you go, actually, you know what, Carl, that makes sense. The way you explained it to me, actually, I think that's how the market's thinking too, because I've done all the wrong things as well, and that actually makes a lot of sense. Or you say, Carl, technical analysis is a lot of garbage. I'm going to go listen to Roger. The choice is yours. Let us keep moving. We're going to go to CHN. I definitely want to talk about this one. So that was the other one that we were on the verge of. I think I might have shouted at some people. So, you're getting all my setups wrong. CHN. And we wanted to see, because I didn't have this candle yet. But you can see what I drew. I said, well, it can't be a turnaround yet because I need to see this move. I need to see the demand coming in to tell me it's acting as dynamic. The trend ribbon is acting as dynamic demand, and I felt that this candle, when I saw it, we didn't have it last time, but I felt that was enough to say, above average volume, strong volatility. I think a good closed out of the zone, and short-term trend ribbon doing the job. Is this an example of the long-term uptrend ribbon acting as dynamic demand? And that would be the only thing you could question me on. And maybe I got a little bit excited about the strength of that candle. And you have to remember, I also got it wrong here. Well, when you say I got it wrong, if you remember, we went plus 1/3 there. We might have even said next high close. I don't know if we ended up getting it, but we were looking to go long here. And it just wiped out. So it does have a history of not doing the right thing. But anyway, for what it's worth, if you're wondering why I put it in on that day, that's what I was thinking. I knew that the next day would be like this. I say I can't predict the future, but I knew CHN was going to burn me after putting my neck out like that. Look, today's candle's not terrible. Hopefully it's coming back. There's the hopeful word. But this is confounding. Here. So I may just have to resign myself to the fact that I don't know what the hell's going on with this one. But if you did happen to get in it on this day here, okay, today's candle is a solid one. I think what the Friday's candle gives us, as confounding as it is a point of demand now, or a point of no return. So if we were to close beneath that, I think the trade's null and void, and we just take our lickings, and like this is why we step into something, particularly on these turnaround setups. It makes so much sense to add a third, then add a third, but you get a bit more confirmation, then add a third. I mean, if you wanted to have a model where on the continuation setups you added the whole risk, or 2/3 instead, or a half, or whatever, that makes more sense. But it's important, I think, on these ones to step in. Okay, so a third of what we would typically risk on a trade, might get wiped out on this one because it might be a little too early, and maybe I got a bit too excited about one candle. I don't know, only human, I guess. See how you go, I think, on that one. Robert, I don't think you're completely dead on that one just yet. Perry's got an ASX stock on ASB, which we have looked at a couple of times a day. I think we said FRP last time. I don't know which candle it was. Maybe it was this one here. We said next high close to add a third. I think I might have run it on this day here. In fact, I'm pretty sure I did. So you might have got in on today's open. If not, today's candle certainly constitutes that next high close. So today we would be FRP plus 1/3. So that one looks very good. I know many people are on this one and they're doing quite well out of it. So hopefully that continues to be the case for you. No round numbers until we get to 5. But when we get to 5, you know what to do with it. Thanks, Perry. Adonis asking for ADH short positions. Yes, it has come up on my scan list. In fact, I'm pretty sure it went in this morning's chart watch, did it not? Pretty sure it went in this morning's chart watch for a potential turnaround setup. And it's very, very early days. So, yeah, look, it's turnaround. It's not aggressive, but it's a turnaround. And yes, I agree with you. That's the case. Today's was not a convincing move to the upside to negate what I think is a changing of the demand supply equilibrium here. And I would say next low close on this one. So if you haven't done it already, next low close minus 1/3 because we're going short on this one. And if you're wondering, are there aggressive short setups? Well, there's aggressive long setups, so there are also aggressive short setups as well. But we don't talk about those, do we? If you want to ask about them, you can, but we just don't tend to talk about them because the setups don't really come up, do they? Let's go to FPH. Yeah, well, FPH is also doing the same thing, and I'm pretty sure I put that in this morning's feature charts as well. So exactly the same thing. If you didn't get in today, I don't mind at all. But the next low close minus 1/3 also. They are almost well, they're very similar setups. This one is happening over a slightly longer time frame than ADH, but it is certainly changing trends. It is the opposite of that long setup that we discussed at the start of today's presentation. Going to Ian now for FWD, which looks fantastic. I'm pretty sure we talked about this last week. It then popped, I think, so that's good for people who maybe got on it. Maybe that, Ian, that's you. Is 250 a round number? Not really. I don't think there's anything particularly special about 250, particularly if we've been there in the past, which I think we have, so not too fussed about that. I think you need to necessarily take any off the table just because of that. The candles are fine. There's no reason in either of these candles to do anything but continue to hold. So, yeah, I wouldn't do anything else. Would I add risk? No, I think it's one of those, a bit like Megaport, where we're just waiting for a little bit of a pullback consolidation. It might not even pull back. It might just be 2 or 3 small candles where it's just working through the supply that naturally comes from a pop-up. People that their brains can't comprehend anything more than, oh, that's gone up, I need to sell. Not, well, that's gone up for a really good reason, and it has gone up for a good reason. And that reason is going to continue to stimulate the people who bought in this move to buy any pullbacks, to wait patiently for any supply to come out and then to absorb it. They don't want to chase if they can avoid it, right? Because they'll just end up paying more. They do want to see that supply come out. And then their fingerprints on the market will create those lower shadows. That is by the dip activity. So that's what we're looking for here. We saw a little bit of it today, but it wasn't a high enough close to add risk. I think certainly we are FRP. And yes, in summary, next high close, then we are plus 1/3 because everything else checks out beautifully here. Hopefully that makes sense too. Everything should make sense. Everything should be, that actually makes a lot of sense, what you're saying about that, Carl. And if it doesn't, question me on it. Telex, what did we say last time? We said FRP, we even said plus 1/3, so that was on this day here. It's pulled back. I can't tell the future, unfortunately. It's pulled back with a decent candle here. Maybe it was earnings, I don't know. Or maybe it's just the fact that markets got belted. Let's face it, they got belted on Thursday night. We would have reacted on Friday. And in fact, they got belted on Friday. So tech stocks got belted. So that's probably what that is. So even though tech stocks got belted, this one is still beating the market. You can see from the relative strength comparative and quite significantly so. And that lower shadow tells you that that buy the dip activity was there. So that is good. Today's candle is disappointing though, I guess, in the context of a strong day on the market, it didn't want to follow through. So all we're waiting for now is confirmation. There's that word again. Is it confirmation? Do we get confirmation of the demand side? And up we go, and everything's hunky-dory. Or do we get confirmation of the supply side? And then we've got problems. Okay, so if we call this, say, scenario 1, and scenario 2, and no, which one? Which one do we get confirmation of? And if it's scenario 1, happy days. No problems. We hold on. If it's scenario 2, we may be looking to take some risk off the table in and around these peaks that are being formed with bearish supply side candles. Or, at the very least, we now can peg this area here. If we don't get, say, scenario 2, if it just goes straight down tomorrow, we do have that area there. And I would say that a close beneath here, we're taking some action. And a close beneath there is also a close beneath the short-term trend ribbon, so whether you do 1/3 or 2/3 is up to you. But I think close below is certainly managing risk. I'm going to say at least a third. Okay, and if it's a really bad candle, then it would be promoted to 2/3 in my opinion. So hopefully that's satisfactory for you. Not the fact it's pulled back, but what to do about it. This is looking a little bit like a changing of short-term trend, isn't it? In that we have moved beneath the short-term uptrend ribbon with lower peaks and lower troughs. So the supply side is in control in the short term. And it looks very early signs that that short-term uptrend ribbon has gone from an area of dynamic demand, so consistently dynamic demand, to now potentially acting as an area of dynamic supply. So I think, and we actually said this, I think last time, if we take this arrow here and extend it across, and it looks like, don't quote me, but go check the tapes, it looks like we said something like, well, if it closes beneath there, we would minus 1/3. So I think we can now adopt that approach. And really what we're looking for now is at the question mark area, whether we're seeing a nice supply side candle, an upward pointing shadow, black candle, and I think that's when you're knocking out the next third. Don't ask questions, don't pass go, just knock out the third if you see that in here. And then probably the final third might be coming sort of on a close beneath there, because that's a little trough that's been made. I don't think you would want to continue to hold it, would you, if it was to make yet another lower trough at some stage? So, close sort of beneath here, then we're taking some risk off the table as well. You might want to get yourself to a position where you're just keeping a little bit of skin in the game because of, and we've said this in the past, because of the wonderful long-term uptrend. But I do think we're moving to a lighter risk position on Medicus. And that's a fairly big statement given how well it's done and given how solidly we've followed this trend all the way up. I'm not sure what that's all about. To 200, the 200 round number. There you go. So really, the only risk off that we've taken on this was at $200, and I stand by that. That's our job. That's what we have to do. But we would have probably got that risk back in pretty quickly once we found that $200 is not a blow off top or anything like that. So I think traded pretty well on PME, all things considered. Let's go to NWL, which is at a very similar position. We've obviously done some writing on it last week. Let me just take that and maybe just shift it over here if that makes it any easier for you, and just stand by that. I don't think we need to do anything else but reiterate the rationale for that is if we close beneath that point of demand, something's not right in the short term. Therefore, just taking a bit of risk off the table, plus 1/3, I think that makes a lot of sense. Let's go to Peter. It's got REA. I can't say, I was going to say that's not a dividend. That's the takeover of Domain Group by, what were they called? I can't remember. I should know, but I don't care. I don't care. Something Star, wasn't it? And obviously potentially a big rival. So REA dropped, which is bloody annoying because prior to that it looked awesome. And this is part and parcel, ladies and gentlemen, of not being able to tell the future. But this is a big black candle here, ultimately. So I think on the basis of that, you do take some risk off the table, at least 1/3. And if it suits you better, minus 2/3. Whatever you have left behind, however, I think you hang on now to whatever you have left. Let's just hypothetically say you've got 1/3 left. I went to plus a third. I'll go FRP 1/3. Just citing whatever you've got left, hanging on to it, because I think these two candles are good enough to warrant that. And we're back at the long-term uptrend ribbon. If you've never had this, would you buy it here? It's tough. It's tough for me because this move, it's not normal. It doesn't happen every day. It's a complete exogenous shock, and it's out of left field. Could mean something, could mean nothing. Not that I care, but it's just one of those things that all bets are off. Afterwards. What I can say is I think it looks really strong here at the long-term uptrend ribbon. The rally from there is very strong. I think you need to have some skin in the game. I think I've said enough, but that's really tricky for me to do technical analysis on, because it's not your average everyday sort of price move, is it? This one's really easy. Happy to hold here. I know that's scary for people. If you don't want to add risk on it, that's fine too. If you try and find something that's a bit closer, to the green ribbon, that's in a nice uptrend, and that's always a good way to go. And if you can't find it within yourself to buy the vertical chart, that's fine. I get it. Otherwise, I can't see any reason why you wouldn't continue to hold. So it is 100 million% for me. FRP, I wouldn't sell a share. And the only question is whether you would add some risk on this, and I can't see why not. It's still very, very strong, but you may well have a preference for trying to find something that's a little bit more of a coiled spring potentially than the extended spring. Not that the spring's necessarily going to contract, I'm not worried about that, but just we may see a consolidation up here for a period of time before we get that next leg up. But happy holder, certainly on that one, Haraji. Haven't heard from you for a while, Haraji, so good to have you back. Good to hear from you. Who's all saying that Qantas looks lovely? I do think it looks lovely. It certainly made the feature list today. You can see down there. So very much for me, and it's been one of my favourite charts actually over quite a period of time. Oh, $10, isn't it? $10 is on the agenda now, but we can see how little impact $10 had on it, say, because I'm pretty sure we have been to $10 before. Oh, we haven't been to $10 before on Qantas. Well, there you go. If you took some off the table today, no qualms, because that's what you're supposed to do. That's in the model. If you forgot, like me, looking at that, you would say no need to now, because there has been no impact at $10. So just scratch that one and just keep going on your merry way. If you took some off the table, that's okay. Look, do you want to get back in? It's up to you. I can't see why you wouldn't. It's just something you do as a precaution. It's only a third. But happy holder for what you've got left, and if you're interacting with this for the first time, FRP plus 1/3. Let's go to Halo is, I'm guessing, a US one. We'll do that in a second. We're nearly at the end before we head back up. CHC from Jackie is in the feature list. I think it looks great. This candle, I know it looks a little innocuous, but I love these really shallow pullbacks, and I'm happy to buy any. Get this, I'm happy to buy any demand side candle, any high close in any shallow pullback in a strong trend like this. That's all I'm waiting for. So I got it today. I felt I got it today, and it's plus 1/3 for me on that one also. Made a feature chart. Yes, shallow pullback. Jackie, you've nailed it. Exactly what I'm looking for there. Founder selling Intellex. Okay, that was the pullback. It wasn't just that, Jenny. It was the fact that the Nasdaq was down about a million points as well on Thursday. So the fact it withstood founder selling and the Nasdaq falling 1 million points, I think, says a lot about the strength of that company. Having said that, look, we can't fall in love with these things either. We need to follow the price action too. We're going to head back up the list, and we're going to head over to the USA now. So let's do that. We'll skip past. Oh, Roger there, looking very dapper in his blue suit. Okay, I do wear suits when I go interview those CEOs, don't I? I probably, I should do the Zelensky. I should just do a Zelensky one time. Is it combat uniform, army boots, and just wait for the question, why aren't you wearing a suit? Let's go to USA. But before I go to the USA, I'm going to double click on this. And we've got the Nasdaq there already, so that's cool. Let's go to Perry's RTX Corporation, which looks amazing. RTX, what is this? RTX. What is this? RTX. What are these guys doing? Okay, there you go. And in the back of my mind, I'm saying, has somebody typed it in yet as to who are they? What's their history? Has anybody figured it out? I think we almost started on this today when I said the defence stocks are starting to move. Aerospace, a bit more than aerospace, Peter. I think that's the thin veneer. That's the PR. Okay, so this is the old Raytheon, they make stuff that is usually a component in something that blows something up. So hence defence stocks starting to move. So RTX, I guess, sounds more benign or less Terminator 2-ish than Raytheon. So we'll go with RTX. Looks fantastic. So disclaimer, some people might have ESG concerns. Some people say, oh, look, I'm not going to touch defence stocks for good reason, and that's up to you. I don't mind, but, for me, it's a 3-letter code. So RTX is in a great trend, double green. We actually know, I think it's relevant. I do think it's relevant. It's in a sector that's doing well at the moment. And it's a bit of a coincidence that we know that, but we know that. That's the weekly chart. Looks amazing also. And with great trends, great price action, great candles, certainly very much a Perry stock on this one. Let us go FRP plus 1/3. Plus 1/3. A little bit concerning, isn't it, when defence stocks are doing so well? Let's go to ORI. Old Republic, which I'm pretty sure is not a defence stock, but still looks very, very good. A little bit more of a turnaround-ish play. Still, don't get me wrong, still double green, which makes it continuation, but we can see it has been a turnaround in the not too recent future. But looks good off that base. Great candles, can't complain. I don't think this is a big issue up here. I mean, that might have been the shadow of $40, possibly. Let's have a look. Yeah, first time there. Could have been the shadow of $40. Bit of a pullback in what was otherwise a very solid trend, and pushing higher, pretty nice. I can't see any reason not to do this. And I think this is where the RSC is actually coming into its own here. We can see just how much better than the rest of the market is doing right now. So I'm going to go FRP plus 1/3 on that. Also, and what I should remember to do is click save as well for next time. And I'll just go back to RTX and save that one also. Let's go to Perry's third one, which is Yum Brands, and definitely not a defence stock. This one, fast food brand over there in the USA. I love this. I love this move, and this is why I like to buy gap ups on earnings. It might take a little bit longer for it to happen in Australia because we're very much of that mentality. It's gone up, I need to sell. Whereas I think in America, they're more of the mentality of I've gone up, it's gone up, I need to buy, which actually makes a lot more sense when it comes to stock markets. When it comes to buying stuff at Woolworths, we don't go, the price of eggs have gone up, I need to buy more eggs. Anyway, let's go to from D to W weekly, and clean breakout here. So absolutely 100% cannot find a reason not to be FRP plus 1/3 on this. And I think 3 really high quality setups there from Perry. Thank you very much. Let's keep moving up the list to Halo. This one for Peter. Halozyme Therapeutics. Great ticker code. Looks good. Looks very solid. Doesn't have that sort of dynamism perhaps of the last 3, but very solid. I think on balance, the probability it goes higher is far greater than it going lower. But it doesn't have the dynamism perhaps of the other setups. If it's something you really like, if I don't know, the underlying fundamentals speak to you, not that it matters to me, I can't see why you wouldn't do it. I'm a little bit concerned by that point of supply. I think this is the first interaction with that point of supply, and it was a bit ho-hum, wasn't it? I mean, it wasn't a particularly confident interaction with that point of supply. And then if we clear that one, we've got that one as well. But it is double green, it's a continuation setup. The candles are okay. The price action could be better. I mean, we're still sort of lower peaks through here with lower troughs. It's just volatile. It's not consensus. It's not clear cut, yep, I want to be in it, I'm buying pullbacks. I'm a bit sideways, but on Friday night, I took a bit of a step in the right direction. That's kind of order of magnitude stuff. I don't mind it. I can't if you're particularly keen on it, I can't argue against it. FRP, would I plus 1/3 it with my money? No, I don't think so. I think I've already found better setups out there, so I'm happy to hold it if you've got it, but I don't think I'm going to add risk to it just for me. HW, let me click save on that one. HWM, Howmet, which looks much better for me. Yeah, I mean, it's just that's more consensus. Yes, there's a decent supply side showing here, but it came back from it pretty well, isn't it? It's so easy. It's so easy. Like sometimes we saw with the Nasdaq, it's so hard to come back from these big black days, but here it's actually come back really easily. So I'm okay with that. I don't mind. I still would, however, prefer, like if I can find a setup that has as good a short-term uptrend, as good a long-term trend, but doesn't have that black candle there, hands down, 100% of the time, I'm going to go for that other one. Okay, so that's it is a bit of a turn off for me, but in and of itself, no, it wouldn't. It's because it's come back so well. Yeah, I'm happy to have a crack at it. But again, it's not about finding setups that meet the criteria. It's about finding the best setups that meet the criteria, because lots of setups are going to meet the criteria. Okay, let's keep moving up the list, and we're going to go next to well up the list, because I'm pretty sure, and I'd just like to double check. Robert saying RTX makes HIMARS rockets. Confirmation of what I said about they make stuff that blows stuff up, which is contentious at this point in time, let me tell you. But I'm guessing, being a US company, they only sell to the good guys, right? Starting to sound like an episode of some political podcast, isn't it? We don't have many USA ones here. BA. Well, let's go to BA. Let's undo that one. Go to BA. Look, hey, is Boeing any better, ladies and gentlemen? That's the thing, because they have little sub-brands, don't they, Boeing? They've got little workshops and think tanks, and they're making some pretty interesting stuff as well. Boeing doesn't look as good as the other ones. I think we've got some problems here. I think we might have said maybe on this candle here, we might have looked at it in a session. We said, look, it looks good, happy to have a go at it. But I don't think it's worked out. So I think and to be fair, the rest of the market's been really awful, hasn't it? So in a better market, it probably would have done better. I know that's no excuse, but there have been some reasons for it to not do so well. And I think we're in a bit of trouble here. We're back to the long-term trend ribbon. The short-term trend has turned down. We're printing some pretty nasty black candles. I think in the scheme of things, better to not bang your head against the brick wall on this one for the time being. That would be my thoughts, and don't want to be full risk position on this just now. On Boeing for Adonis, let's keep moving. Got a couple here from San. We're going to go to KWEB. Very close. Actually, I had no idea it was that time. It doesn't feel like 8:30 local. I honestly thought it would be like 10 past. So either time's flying and we're having fun, or I've just been talking too much. And it could well be the latter. Look, a bit like Boeing in that I can certainly see why you might have had a crack at it through here, but it just kind of hasn't worked out. I think that candle there with that little white blip is some reason to hold on to it, but I don't think you can give this much more time. I would say, look, if this is not printing nice big white candle tonight, holding that short-term uptrend ribbon, then I think we're taking some steps on this one, taking some risk off the table. As for if we never saw this before, we're looking for something to buy. No, it needs to be showing a bit more upward momentum and some better candles before I'd be looking to add risk to that one. Let's go to SBUX. Which is Starbucks. This one is something I'd be more than happy to add risk to, and just solid outperformance of the broader index, and I guess a pretty defensive company, all things considered. Look, the weekly chart is giving me a little bit of cause for pause, not concern, just a bit of pause in that we are moving into some pretty clearly defined historical points of supply, and then there's one not that far away, around about 126, but given how well we're closing at the moment, I think those ones that are in close proximity aren't an issue at all. And then it's just a matter of saying, well, is there enough room to sort of make this work into 126? And I actually think there is very much enough room. There's a point of demand under there, there's a point of demand there. So a couple of points of demand, we're easily one-to-one into that zone. So no objections on this one, happily a full risk position, obviously, and then plus 1/3 as well. If you don't have it, let me click save and move to MSTR, and I do think we are in our second last one with this one. MicroStrategy in a bit of trouble here. I think we looked at this last week. I can't remember what I said, but I suspect it might have been something along the lines of probably taking some risk off the table, and I think it's borderline untenable now. So it's almost a zero risk position here, and the only saving grace is I guess Friday's white candle, but I wouldn't want to endure any more frustration or pain on this one, and I would have to kind of concede defeat, really, for want of a better word or phrase beneath there, that it hasn't worked out, and just take my medicine and move on and find something that is has a consensus demand side, motivated demand side behind it. So pass on that one. And a final one, probably a decent place to end up tonight from San, is whether the Bitcoin low is in. You have heard me say in the past that I would, before I would entertain getting back in after I did sell a bit up here above 100, kept some but sold some, but that's the way I do things, was to wait for it to pull back to the dark green zone and then have a bit of a move like this. So yes, I don't mind if you wanted to put a little bit of skin back on the game on the basis that it has done exactly that, moved into the zone, thrown in a big... and Bitcoin has to do this. It has to put everybody in a position where they think it's the end of the world, breaking 80, breaking all the trends, and then it just gets bought straight back up, right? And then you get this big follow through. So a little bit of skin in the game here. I think it's order of magnitude. If you've never owned Bitcoin, adding 1/3 of your typical risk position and now waiting. Are we going to get confirmation that the demand side is in control and that this long-term uptrend ribbon is holding? And you can see it might take a couple of goes, okay, before we get that. Or are we getting further confirmation that the supply side is controlled and actually we could break this long-term uptrend ribbon and turn the trend? Okay, and that's probably not as obvious in the recent past, but no doubt has happened before on Bitcoin. So yes, I don't mind on the basis of those candles and pretty decent, I guess, supply side volume and volatility move in conjunction to work on that basis. So let me write that if you don't believe me. Look, FRP, if you've hung on, right? If you've hung on, you've hung on. Nothing changes there, but potentially adding a risk if you've never owned Bitcoin before. And you just want to have some, just for the sake of having some as a concept. Why not? That is officially it for the evening. Let me head back to the PowerPoint presentation, do the usual disclaimer, sign off by saying that everything we've discussed tonight is general in nature, has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Keep in mind that investing, trading is risky. You could lose money. You're probably going to lose money. It can happen. And it's always important to know that it's you and not I who's responsible for everything you choose to do. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you tonight. Hopefully it's one to bookmark perhaps and come back to in the future. In the meantime, as the sign says behind me there on the wall, keep calm and follow the trend until we catch up again. All the best for your trading. Bye-bye for now.